Here's how we raised more than $43 million in 6 days. I just sent an email. Now, there's a lot behind that. So we have the saying at my company, the bigger the brochure, the worse the deal. So think about that. Like, if you see something massive, some beautiful, shiny brochure, somebody behind it is really selling hard to try to get you to buy it. So when you find good deals, most of the time, they're done on the back of a napkin, really high level. Most people understand inherently what a good deal is and what a bad deal is. And so in this particular case, most of our investors knew that we hadn't bought very many projects in the prior 3 years, while a lot of people bought a lot of stuff. And so we just kept communicating to them and tried to manage the properties that we had that they're all invested in already. And we were distributing money every single quarter on most of those projects. And in hindsight, a lot of our investors were frustrated because they're like, why aren't you buying real estate right now? And I would say, it's overpriced. I don't think it's a good time to buy. Let's just wait and see what happens. After interest rates went up and people started to get exposed and cash flow started going down and people ran out of money, that's when we started to relook at the market. So anybody that bought anything in the last 2 or 3 years, it's definitely 30 or 40% less today. So we knew that, obviously, based on the higher interest rates and the higher expenses. So once all that happened, then we simply just started looking in the markets again. So when everybody was in a little bit of pain with higher interest rates and higher expenses, that's the best time to look. When there's disruption, when the banks are concerned and the syndicators are running out of money, that's when you want to go buy the best deals you can. And that time is right now, and this is only going to get worse. We're in the second or third inning of a 9-inning game here. We are at the very beginning of pain. And that is the time that you want to put your dry powder together and start looking for assets that you can buy well below what they were priced at just a few years ago. So one of those properties we found was in Las Vegas, Nevada. And this company had built this project. It was almost 400 units just 2 years ago. It's brand new, and they were struggling with the lease up, which means that they weren't stabilized yet, and they still had their construction loan, which means that their interest costs were high on the loan that they used to actually build the project. Now, you obviously have to be in the business to understand where the pain points are, but this is a property that we really liked. We liked the market, we liked the property, we actually even liked the builder, and it was an institutional grade property, which means that it's a Class A plus property that was well positioned. So this property was constructed for over $300,000 a unit, and we're currently in escrow for about $260,000. So we are also a builder, and so we're building well over $300,000 a door. So we knew that this was well below replacement costs. It had some operational problems. The occupancy was a little bit challenged. There was also room in the rents to grow it because the rents were below the current market. The operating expenses were a little bit high, and it was brand new, and the developer was struggling with a high-cost construction loan. So we could step in and buy that property below market, have a little bit of cash flow, and then fix it, essentially, which is going to take a year to 2 years. So what we did is we made an offer on the property. We got the property in escrow, and then we put together a one-page flyer, still in due diligence with our current investor list, and we needed about $43 million. So we sent that one-page flyer out, and in a period of less than a week, we were oversubscribed, overcommitted for the $43 million. You obviously cannot do this if it's your very first deal. But there's lots of pain and frustration and wisdom and experience that happens as a result of 24 years of being in business with my partner and our team. We have a team of 300 people. We have people going out and sourcing the markets. We have analysts underwriting the deals. We have property managers going out and verifying all the rents. All this happened before we even made an offer. So, of course, you want to reduce your risk and increase your degree of certainty on closings. When you make an offer to buy an asset like this, you've already checked all the boxes. So for us, the due diligence is super important, but it's really at this point a little bit of a formality, making sure that everything that the seller represented is true, and then also going out and getting the best long-term fixed rate debt that we can so that we understand what the cash flow is on day one and, of course, on month 36. So it's important to understand that this one asset is just one indicator of a lot of problems that are going on everywhere, in every market. There's a lot of people that are building, and there's a lot of people that bought value-add real estate with low-cost debt, but the interest rates have gone up a lot. And so it's put a lot of stress and pressure and anxiety on the actual deal itself. So people are running out of cash. They're raising more money to try to save the deals all at the same time when the values are going down. So the values are down on lots of real estate and people are out of cash. So this is the greatest time to try to buy properties below replacement cost, that cash flow, which is the most important thing. Because if you're going to be raising capital like the $43 million, the investors are going to expect some kind of return on that money. So you've got the return on the money that they're giving you, the $43 million, plus you have the capital gain potential of buying a property below market, repairing it, fixing it, growing the net operating income and the value to a higher level so they can also participate in that equity as well. So I know for a lot of you this might be wildly overwhelming, but I can assure you that this is a large project. I earned my way up to this. I started with a 2-bedroom, 2-bath, and I used my own money. As you start to drive around in your own respective neighborhoods and you start to look at distress, it can happen on one house in one neighborhood. All you got to do is look for somebody that's building something right now. I can assure you, whenever they started, their interest rates were less and their cost to construct was less. Both of those things are up. So all you got to do is cut a deal with those people and buy projects. You don't have to wait for a $90 million project. You can do it on one single family. Part of this is just getting more deal flow. And how do you do that? You actually go out and find the markets that you're interested in. And it's a network. It's a relationship. So you should be getting as many deals into your inbox as you possibly can. Because guess what? It's free. It doesn't cost you any money to get on people's lists. And so you should be having all kinds of inbound. You should be overwhelmed with deals because that's free. So if you're not on everybody's list and getting all these deals inbound, that's your own fault. So with my company, when we go into a market like Las Vegas, let's say, we go make sure that whoever the brokers are at the time that we're on all the lists, and we let everyone know we're looking for deals. That is what you want. You want all deal flow coming to you in a market so that you can now analyze each deal individually. The key to that is actually making very quick decisions that are typically no's and just focusing on the ones that look good. So I have a couple friends in our collective inner circle group, which is our mastermind. We have two people specifically. One is in charge of Amazon distribution, and the other one actually went and contacted their own mailman and said, if you find houses that are vacant and haven't been occupied for some time, let me know. And that's actually how they've been finding deals. There's lots of ways to find deals, and those are two really good ideas. So raising money can be easy if you have the right deal. Most people will invest in the right deal, but they also want to make sure that you have the right team. So if you have the right team and the right deal, getting the money is actually easier than it would be if you're trying to find the money and then going out and finding a deal. So I've been buying real estate and been in business for over 35 years. I just made a video of the most important mistakes that everyone should learn from. And this video will help you shortcut any mistakes that I've made.